Welcome to The Explainer. Today, we're diving into a small idea that's had a huge impact on investing for millions of people. I'm talking about fractional shares. So let's get right into it.
So have you ever been there? You're looking at the stock market, you see all these huge, famous companies, and you think to yourself, man, I'd love to own a piece of that. But who has that kind of money? If you have, you are definitely not alone. It's a classic problem for anyone just starting out.
And it's not hard to see why. I mean, when just one single share of a company like Costco or Meta can cost you hundreds or even thousands of dollars, well, it can feel like you're hitting a brick wall. Like investing in some exclusive club you need a ton of money to even get into. But what if that wasn't true?
And that's exactly where this simple but honestly revolutionary idea comes into play. So let's talk about how you can get your piece of the pie, no matter how ridiculously high the price tag is. A fractional share is, well, it's pretty much exactly what it sounds like. It's a small piece, a fraction of a single share of stock. So instead of having to scrape together enough cash to buy the whole thing, you can just buy a little portion of it. And this one simple concept has completely blown the doors open for investing.
You know, that whole piece of the pie idea is so powerful that some of the biggest brokerages have literally built product names around it. You'll see Charles Schwab calls them stock slices, and Fidelity has stocks by the slice. The message couldn't be clearer. You don't have to buy the whole pie to get a taste.
So just how small of a slice are we talking about here? Well, at a massive company like Charles Schwab, you can buy a piece of any S&P 500 company for as little as $5. That's it, $5. And boom, you're a part owner in one of the biggest companies in America.
And believe it or not, it gets even more accessible. Over at places like Fidelity, the minimum is just one single dollar. Seriously, think about that. For less than what you'd pay for a coffee, you can become a shareholder in thousands of different companies. That's not just making things easier, that is a total game changer.
But look, this is about way more than just being affordable. The ability to invest these tiny amounts of money, it unlocks some really smart strategies for building wealth over the long haul.
So what does this actually mean for you? Well, it means you can build a properly diversified portfolio even if you're starting with just a little bit of money. It lets you put every single dollar to work so you don't have cash just sitting around doing nothing. And oh yeah, you absolutely still get paid dividends, but we'll get to that in a minute.
Just take a look at this chart. Let's say you have $1,000 to invest. In the old world, without fractional shares, you couldn't even afford one share of Company A or Company B. You're just priced out. But with fractional shares, you can put exactly $200 into each of these 5 companies. All of a sudden, you've got a balanced, diversified portfolio, and you've completely sidestepped those insane share prices.
Being able to invest exact dollar amounts is also the key to another really powerful strategy called dollar cost averaging. Now, that sounds kind of technical, but with fractional shares, it's super simple. All you do is invest a set amount of money, say $100 on a regular schedule, like every single month. The magic is, when the stock price is low, your $100 automatically buys more shares. And when the price is high, it buys fewer. It's this really disciplined, unemotional way to build up your investments over time.
Okay, so what about dividends? That's a huge question people always have. Do I still get paid? The answer is a resounding yes. You get paid exactly what you're owed in direct proportion to your ownership. So if a company pays a $1 dividend per share and you own half a share, you get 50 cents. It's as simple as that.
All right, I know what you might be thinking. This all sounds a little too good to be true, right? Well, like anything in finance, there's always some fine print. And being a smart investor means knowing not just the good stuff, but the limitations too. So here's the basic trade-off. You get all the economic perks, you get your proportional dividends, and if the stock goes up, your slice is worth more. You're also included in things like stock splits. But on the other side, you usually don't get any voting rights, and here's the big one. You typically can't transfer those little fractional pieces to a different brokerage firm.
And that transfer issue is so important, it's really worth focusing on for a second. This disclosure here from Interactive Brokers is pretty much standard across the industry. If you ever want to move your account to a new broker, you have to sell off your fractional shares first. That means you have to liquidate, which could mean you have to pay taxes on your gains. It's a really key limitation to keep in the back of your mind.
Now, speaking of taxes, here's some good news. It's not complicated. The IRS doesn't care if you own a whole share or a tiny piece of a share. Any gains, any losses, any dividends, it's all treated exactly the same. No extra confusing paperwork, which is always nice. Okay, so you get the what and the why. You're on board. So let's talk about the how. Where can you actually go to start doing this?
Well, the bottom line is, this has gone completely mainstream. What might have started out with smaller, niche investing apps is now just a standard feature at pretty much all the biggest, most established names in the game.
And here's just a quick look at some of them. You've got Charles Schwab, Fidelity, Interactive Brokers, Robinhood, the list goes on and on. Most of the major online brokers now let you buy these slices of stock directly, making it easier than ever to get in the game.
Now, one really quick but important thing to know. Some brokers, like E-Trade or Merrill Edge, are a little different. They don't let you just go out and buy a fraction of a share. You can only get them by having your dividends automatically reinvested. So it's always smart to double-check a specific broker's rules before you open an account.
And you know, it's funny. While buying fractional shares feels like a super new, modern thing, the actual concept has been around for decades. It all started with things like stock splits and those dividend reinvestment plans we just talked about. It's just that the technology has finally caught up to make it a tool that anyone and everyone can use.
It all kind of brings to mind that classic quote from Benjamin Franklin, "An investment in knowledge pays the best interest." And really, that's what this is about. Understanding a tool like this, how it works, the good and the bad, that's an investment in your own financial future. And that's a return you just can't put a price tag on. So let's just end on this one thought. We've just walked through how the biggest barrier to owning a piece of the world's most successful companies has basically just crumbled. It's gone. Anyone with a phone and a couple of bucks to spare can now call themselves a part owner.
So the real question is, what happens next? When ownership becomes this easy, this democratized, how does that change the entire future of investing? And maybe even our relationship with money itself for generations to come? Something to think about. Thanks for tuning in.